Strategy number 1. Buy and hold. In the world of cryptocurrencies, the buy and hold strategy is like the foundational pillar upon which many investors have built their fortunes. This approach is as straightforward as it sounds. You purchase a cryptocurrency and simply hold on to it for an extended period, sometimes years, with the expectation that its value will appreciate over time. The idea behind holding is rooted in the belief that the cryptocurrency market, despite its notorious volatility, tends to trend upward over the long haul. Bitcoin, for instance, has witnessed meteoric rises over the years, making early adopters substantial gains. This strategy primarily caters to those who have faith in the long-term potential of a particular cryptocurrency or the broader market. While holding can potentially yield significant returns, it's not without its risks. Cryptocurrency markets can be highly unpredictable, and prices can experience substantial fluctuations. Hence, patience is the key. This strategy requires strong hands, the ability to weather market storms without panic selling. Buy and hold is a timely strategy that aligns with the fundamental principle of investing, buying low and selling high. It's not about quick gains, but rather about building wealth over time. Remember, do your research, diversify your portfolio, and only invest what you can afford to lose. Strategy number 2. Day trading. Day trading is a high-octane strategy where crypto enthusiasts aim to profit from the rapid and often turbulent price swings that occur within a single day. In this adrenaline-fueled approach, traders buy and sell cryptocurrencies such as Bitcoin or Ethereum multiple times throughout the day, aiming to capitalize on short-term price fluctuations. To succeed in day trading, one must possess a unique set of skills. Technical analysis takes center stage, where traders scrutinize charts, patterns, and various indicators to make quick decisions. It's a fast-paced game that demands split-second judgment calls. Day traders are tethered to their screens, watching the market like a hawk. They leverage tools and trading platforms to execute orders swiftly and minimize risks. Constant monitoring is essential to seize opportunities and avoid potential losses. Day trading can be extremely rewarding, with the potential for substantial profits in short time. However, it's not for the faint of heart. The crypto market's volatility means that losses can mount just as quickly as gains. Risk management and discipline are paramount. Day trading is an exhilarating strategy for those who thrive in fast-paced environments and have a knack for technical analysis. It can be a lucrative endeavor, but it comes with considerable risks. As with any crypto strategy, it's crucial to start small, practice with virtual accounts if possible, and only invest what you can afford to lose. With this, day trading is surely one of the strategies that would set you up for success. And hey, isn't that the main reason you're here after all? You're in pursuit of your personal success, driven by dedication and motivation to make everything work. Well, not to worry, because here on Business Mind, we want you to dream big and achieve bigger. And we have set it up just for you. Check the link in the description below, and who knows, your streak of success might just be one click away. Strategy number 3. Swing trading. Swing trading is a strategy that caters to those who seek to profit from medium-term price movements in the cryptocurrency market. Unlike day traders who buy and sell within the same day, swing traders hold onto their cryptocurrencies for a few days or even weeks. This approach allows them to capture potential gains from market swings while avoiding the intense pace of day trading. Similar to day trading, swing trading also relies heavily on technical analysis. Swing traders meticulously analyze charts, patterns, and indicators to identify potential entry and exit points. They aim to ride the waves of market volatility without getting caught up in the minute-to-minute fluctuations. Swing trading can offer substantial profit potential, particularly if traders can accurately predict and exploit medium-term trends. By holding onto their assets for a bit longer, they give themselves a better chance to capture significant price movements. While swing trading is less frenetic than day trading, it still carries risks. Market volatility can be unpredictable, and traders must be prepared for the possibility of losses. Risk management, as well as the ability to adapt to changing market conditions, is crucial. Swing trading strikes a balance between the adrenaline rush of day trading and the patience of long-term holding. It is a strategy that rewards skillful analysis and strategic timing. As with any crypto strategy, it's essential to start with a solid plan, practice discipline, and only invest what you can afford to lose. Strategy number 4, staking. Cryptocurrency staking is a strategy that enables you to earn rewards by participating in the validation and security of a blockchain network. Unlike trading, staking involves a more passive approach, making it accessible to a wider range of crypto enthusiasts. When you stake your cryptocurrency, you essentially lock up a certain amount of coins as collateral to support the network's operations. This contribution helps secure the blockchain and maintain its functionality. In return for your support, you receive rewards, often in the form of additional tokens from the same cryptocurrency. Staking is commonly associated with proof-of-stake or POS blockchain networks, which rely on validators rather than miners. POS systems are energy efficient and allow users to stake their coins to secure the network. The rewards you can earn through staking can vary depending on the cryptocurrency and network. Some offer fixed annual returns, while others have variable rewards based on network activity. Staking is generally considered a low-risk strategy, as it doesn't involve the same level of market volatility as trading. However, there are risks associated with network security and potential slashing penalties if you violate network rules. Staking is an excellent option for those looking to passively accumulate more crypto while supporting their favorite blockchain projects. It's relatively user-friendly and doesn't require constant monitoring, making it an attractive choice for long-term investors. Strategy number 5, airdrops and forks. Airdrops and forks are intriguing events that can unexpectedly boost your cryptocurrency holdings without any direct investment on your part. These opportunities arise when cryptocurrency projects or blockchain networks decide to distribute free tokens to holders of a specific cryptocurrency. Airdrops typically involve a cryptocurrency project deciding to reward its community or promote its token by giving away free coins. Holders of the parent cryptocurrency, or sometimes even non-holders who meet certain criteria, receive these tokens for free. It's a way for projects to distribute tokens widely and gain attention. Forks occur when a blockchain network undergoes a fundamental change or splits into two separate chains. This can result from disagreements within the community or the desire to upgrade the network. When a fork happens, existing cryptocurrency holders may receive an equal amount of the new cryptocurrency created by the fork. This can be a significant windfall if the new coin gains value. Participating in airdrops and forks often requires minimal effort. It can be as simple as holding a specific cryptocurrency in your wallet at the time of the event. The rewards can vary widely, from a few tokens to a substantial amount depending on the project's goals and the network size. While airdrops and forks can be lucrative, they also come with risks. Not all tokens distributed through these events end up being valuable. Therefore, it is essential to conduct thorough research and exercise caution when participating in such opportunities. Airdrops and forks offer a unique way to accumulate additional cryptocurrencies without direct investment. Keep an eye on news and announcements within the crypto space to be ready for these opportunities, but always stay vigilant and research the projects to ensure they are legitimate. And there you have it. We have explored the art of multiplying your cryptocurrencies. Remember, it all starts with a business mind, the kind that dares to dream big and strives to achieve even bigger. So check out the description below for the thing that could help you do just that. And if you're ready to turn dreams to achievements, don't hesitate to like, subscribe, and hit the notification bell right here on Business Mind. Stay connected for more insightful content that empowers you to take your business journey to new heights. So, go ahead, dream big, work hard, and watch as your efforts translate into success beyond your wildest expectations. This is Business Mind, reminding you that when you dream big, you truly can achieve bigger. Business Mind, signing off.